Hello, good morning, ladies and gentlemen. You're with Martin Peneth, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. As usual, starting with North American markets. Yesterday, little movements on the US main markets, 10 points for the Dow, 26 points for the NASDAQ. Dixie is slightly up with 0.10 points. Columbus Day was yesterday in the US. Even though we have referred you to Royal Bank of Canada's Mr. Poloz Speech, the Bank of Canada's goal of targeting inflation today at rate of 2% must come ahead of financial stability goals. This is what Mr. Poloz said. The bank is also conducting research into potential costs and benefits of using monetary policy to head off a housing or a banking crash. The central bank's 5-year policy agreement with the government is due for renewal next year. Mr. Poloz reiterated Monday that the central bank should be the last line of defense against threats to financial stability, which must first be addressed by individual borrowers and lenders, regulators, and officials who crafted macro-prudential policies. He didn't comment in either speeches about his next rate decision on October 21st, where economists predict he will keep the key overnight lending rate at 0.5%. Today, we have the monthly budget statement in the US for the month of September. Tomorrow, retail sales, and on Thursday, CPI data for the US. Moving to the European markets, DAX 30, 25 points up. The French CAC 40 was a little changed yesterday. Early this morning, Germany's CPI data came out pretty much as expected. Wholesale prices month on month slightly better than previous. However, the year-on-year report came out worse than previous to 1.8 from 1.1%. Swiss producer import prices and month-on-month and year-on-year are coming out as we speak. The ZEU economic sentiment reports for Germany and the European zone are coming later on today in the afternoon. Yesterday, there was the International Monetary Fund meeting. The chief, Mr. Lagarde, warned the central bankers to continue with the low interest rate. They responded that keeping them at a record low for too long could prove very dangerous for the global economy. We'll see how that would go in the near future. The euro was pretty much moved versus the Pacific currencies, the Aussie 90 pips and the Kiwi 70 pips down, and versus the Canadian dollar 60 points up. We are expecting PPI, CPI, property market and retail sales reports from the UK today. Tomorrow, the major event would be the industrial production for the European zone and inflation data CPI reports on Friday for the European zone. Moving to the Asian Pacific markets, the Nikkei 225 a little bit over 100 points up yesterday, going down today. Consumer confidence index for September, a little bit worse than expected. Then we had imports year-on-year in China, 2.7% worse than expected. And then exports year-on-year came out 5.2% better than the expectation. Still negative, minus 1.1% though. Trade balance for September, $14 billion better than the expectations. Basically, the Asian currencies halted a 7-day run of gains as a sharper than predicted drop in Chinese imports added to signs the world's second largest economy is slowing. Emerging market stocks slid from a 9-week high as commodity producers dropped after China's imports slumped more than the estimation. Malaysia's ringgit led developing nation currencies lower. Tomorrow we have CPI, PPI, and also foreign direct investments for China reports year-on-year. Very, very, very important reports. On Friday, we have Mr. Karuda's speech for the yen. With regards to the Pacific front, we had Governor Lowe's speech yesterday. Australia will need to boost its productivity through a more flexible economy if it wants to increase living standards rather than relying on any renewed lift in export prices or lower interest rates. Australia's central bank deputy governor Philip Lowe said that in his speech yesterday. The rate at which our living standards improves is unlikely to be driven by the actions of the central bank. Instead, the improvements in our living standards rest on our ability to improve our fundamentals and enhance the flexibility of our economy. Interest rates are not the source of long-term growth in living standards. Ideally, what we want is a world in which interest rates rise. Australia's flexible exchange rate has arguably been the single most stabilizing influence on our economy. In particular, the depreciation over the past couple of years is playing an important role in helping the economy adjust to the wind down of the boom in the mining investment. Traders are pricing in a 35% chance of another rate cut by this December. Today, the Royal Bank of New Zealand Governor Wheeler will deliver a speech which was unscheduled. We just saw it in the calendar about half an hour ago. Tomorrow, we have the Westpac Consumer Confidence Report for the Aussie National Bank Confidence Report, and for the Kiwi Business PMI scheduled report. The employment data for Australia is also scheduled on Friday. Going to the commodity sector, the S&P 500 index had a range of a little bit over 10 points yesterday. Currently at 2015, going sideways. Gold had a range of $14, trading at $11.54 right now. Silver had a range of 40 cents. The WTI had almost $3 range at 47.40 right now. Natural gas is trading at 2.51 at the moment, range of 4 cents yesterday. Oil prices sank yesterday after a report that OPEC continued to boost production. China trade data showing a deterioration in its economy, and expectations of higher crude stockpiles in the United States help limit any recovery. Gold jumped to near 3 months highs on Monday amid a softer dollar. An interest rate hike is viewed as bearish for gold, which is not attached to dividends or interest rates. Gold struggles to compete with high yield bearing assets in rising rates environment. Putin's gas ties with Turkey went sore as the nation's fallout over the conflict in Syria. Moscow-based Gazprom, the world's largest gas producer, said last week it would cut the capacity of a planned link to Turkey and onto Europe by 50%. Turkish President Mr. Erdogan warned Russia last week that energy cooperation could suffer because of the former Soviet nation's violation of his country's airspace and military buildup in the region. This is pretty much all from today, all the major events listed in this video. I wish you a successful trading day. Cheers. Bye-bye.